Welcome back, our accounting boffins out there. Yes, our accounting shining stars, as I refer to you, because certainly you are an accounting shining star. We're busy with the income statement. Now, understand the process. The income statement doesn't just drop on you or just pop out somewhere like some kind of a genie. No. What's the process? When it comes to the recording of transactions of an enterprise, your financial statements forms the last step in this process. All the transactions are recorded as they occur, and at the end of the financial year, we will then prepare the financial statements. So clearly you can see here that this is a process that takes place, and it records transactions during the year, and the final stage, or the ultimate one, is when we come and we prepare the financial statements. It's like you. During the year, you're attending school, but ultimately at the end of the year, what do you want? You want your report, which indicates your progress for the year. The business is the same way. Now let's look at the cycle of transactions so that you understand that things have a starting point. In other words, watch this here. You will start off with your source document. Every transaction starts from the source document. That source document is entered onto your pre-adjustment trial balance. Okay? Definitely you know that you've entered the source document, right? And let's just get the order right. Yes, you're going to prepare a pre-adjustment trial balance, but before we come to the pre-adjustment trial balance, from your source document, you're going to move into your subsidiary journal. Okay? So, source document entered where? Into your subsidiary journal. It is then posted to your ledger, right? Because remember, what are you seeing as a question in front of you in the exams? You are seeing this pre-adjustment trial balance that you are working from. So that's why I've put it there for you, so you can relate to the pre-adjustment trial balance. But your order, definitely source document, subsidiary journals, your ledgers. When your ledger is prepared, then definitely you would take your ledger totals, and the final totals that appear in your ledger will now be put into your pre-adjustment trial balance. So now you are expected to do the year-end adjustments. Okay, and when you do the year-end adjustments, you taking into consideration certain accounting concepts that you need to be applying. Right, but more about that later. Once you've completed your adjustments, you now prepare a post-adjustment trial balance. Obviously, pre, before, post, after. Okay, so after you've done all your adjustments and additional information, you now prepare a post-adjustment trial balance. And remember also that it is from your pre-adjustment trial balance, the nominal account section, that you use to draw up your income statement. Very important. I'm appealing to you. Note, it's your nominal accounts that's going to be used to draw up your income statement. And it's going to be your balance sheet accounts that you use to draw up your balance sheet. But more about the balance sheet some other time. Our focus today is the income statement. Like I said, the balance sheet, yes, a financial statement, but we'll be dealing with it at some other time. So what will your income statement reflect? Your income statement should reflect all incomes and expenses which apply to the financial period under review. A very, very pertinent statement. 1. The income statement reflects all incomes that you have earned and expenses that you have incurred. Very important, guys, which apply to the financial period under review. You're working within a specific financial year. Important. So in other words, whenever you are doing a question of this nature, be careful of your dates. Right? So you know exactly which is the financial period under review. So therefore, this statement would only include income and expenses accounts. Only incomes and expense accounts. The purpose of preparing the income statement is to do what? It is to determine your net profit or loss for the period. That's why you're preparing the income statement. It's going to give you your profit or loss for the financial period that you are working with. Now, obviously, the income statement must be prepared in keeping with GAAP principles, generally accepted accounting practice. Remember that these principles are important, especially the matching principle, where incomes earned and where your incomes earned and expenses incurred must be matched for the same period. Therefore, guys, what are we saying? That when we're looking at the income statement, we're going to be concentrating on certain incomes and expenses. Now remember this in conclusion for this segment. What are we saying? We are saying it must be in conformity with GAAP. It needs to be in conformity with accounting as we know it internationally, IFRS, International Financial Reporting Standards. It's a word you're going to come across very often. But you want to know more, don't you? And you want to know how we do the actual income statement. So therefore, you're going to stay with us because we'll be back with you in a jiffy.